Okay, so we're going to continue from where we stopped on journal entries. Um, yeah, so basically we have all the notes that we need to. These are just what I decided to do was I'll take out certain things that usually occur within the course of business and why people usually apply journal entries. You know, salaries, bad debt, depreciation, open entry. So basically, when like, this one is very very clear. You your outstanding bills can be recorded to OS using this type of entry, open entry. Selecting the type will affect the balance sheet account. So we are working on a particular column. Project Chicago is coming on board between now and the end of the week. And the goal is for us to actually start the account from January 2021. We're already halfway through February. So definitely we're going to create journal entries to be able to update the different accounts. You know, we want to update bank accounts. We want to update, say for instance, um, um, Mr. Mr. Jubril introduces 20,000 naira into the business, and they use that 20,000 naira to buy gas, to buy fuel. You know, how do you how do you post that? Make a journal entry. You know, 20,000 naira coming to the business is definitely some form of equity. You know, so under the chart of account, you make sure that you are selecting equity, and the money is going to the bank. That's so you see that there's one particular amount and there are two entries. There's always going to be a corresponding entry. I need you guys to understand this concept because when we are doing assessments and when we are doing tests, our goal and our focus is not on what is depreciation. No, it's the application of knowledge. Is you understanding the concept. That is what you'll be assessed on. The understanding of the concept of what we're trying to do. You know. So yeah, on a nutshell, this is basically what it's all about. Journal entries. We're going to accounts receivables. Um, if you guys don't have any questions. So do we have bills outstanding, payments to be made to vendors? Do we have invoices outstanding, payments to receive from customers? Do we have documented policies on payments or receipts? Do we have customers we send invoices to daily, weekly, yearly? How do we document these reports? Account receivables, account payables. In the United States, their accounting is broken down to ARR, payables and receivables. And that's because some organizations do so much transactions as in a lot of payables, a lot of receivables. Like Project London. Project London, you can see that because of the size of the organization, they have been able to break their units accounting department into various units. If you do not take time to figure out your payables and receivables, it's either you're going to lose money by not collecting money from vendors, from customers on time, or your cash flow will just be disrupted because of payments you have to make to vendors. So accounts payables, accounts receivables is a very, very important part. And as we grow in Teekay and Henry, we are looking at a situation where we're going to actually have accounting broken down to payables and receivables. Because you're going to have a lot of customers, a lot of clients, and for you to be able to keep up with all the payment terms, outstanding invoices, it's a full-time job. Depending on the size of the organization, it's actually a full-time job. So, important outstanding invoices. There's a what they call an open invoice creation tool. So basically, there's a tool. Let me go to OS. So, Okay, so basically what this does is we are moving from zero accounting to OYASync. And we want to make sure that all the invoices that we have that are opened, that have not been closed in in zero, are transferred to OYASync. This is a tool that would enable us to do this seamlessly. Now, sales, purchases, accounts payable, accounts receivable. You need to understand when it comes to sales, when you talk about sales, for those of you that are non-accountants and want to become accountants, when you're talking about sales, sales actually usually it's synonymous with accounts receivable. Now, the concept of accounts receivable in the layman's term is you made a sale and somebody has not paid for it, you know, or they made part payments towards that sale. I sell goods to we provide a service to if we provide a service to Sheraton Hotel, ERP systems, give them a bill of 500,000 naira. They pay 250,000 naira. The balance of 250,000 naira, it goes to what they call accounts receivables. So that when we run our reports, we see that under accounts receivables, money is being owed to us as a company. That is Teekay Henry or whether it's OYSing. If that money is paid in full, it automatically leaves accounts receivables. I need us to understand this concept. Purchases, accounts payables. When we get for instance, Mr. Stanley comes and says to do networking at Project Chicago, it's going to cost 700,000 naira. We give him 500,000 naira, remaining 200,000 naira. It goes into accounts payables, meaning that we are owing him 200,000 naira. We don't give him any money at all. The whole 700,000 naira goes into accounts payables. So we need to understand the concept of payables and receivables. So over here, we say the company that we are referring to is what you think. Okay, so these are the different people that we want to update the account. So we say, for instance, we say Bayo Coco, then individual. This invoice was given to him November 3rd, 2020, and it was due December 19th, 2020. You know, amounts outstanding 50,000 naira. You come here, you go to another client, another customer, Dangote. We invoice them. So in 2019, February 4th. So, okay, how much? 200,000. And the list goes on. So the goal is that you are moving from one software to the other. You're going to see a lot of clients like that, moving from one software to the other. This is one tool that a whole lot of us are going to be using on a day-to-day basis. Even with Project London, by the time they go into accounting, which they're going to start this week, and some of you are going to be on that account. Some of you will just take up this tool and begin to update. Because from January to date, the goal is that we want to update their records. They have payables, they have vendors, they have accounts that they are owing. You know, this is one way to this is one way to actually categorize, clearly categorize who and who is owing you. Or else we can go back and we can actually make a journal entry to that effect, you know. But with this, you can do multiple clients, multiple customers, or vendors at the same time. So do we have any questions before I move from this page? Any questions?
Yes, there's a question. Hello.
Okay, I'm listening to you.
For this party, where do you add the names of the vendors or the particular person you want to select?
Okay, so that's a very good question. Can somebody answer that question? Someone on the group? Does anybody on the group have an answer to the question? Okay, so basically the party is those are if let me go to the next place here. Now, speaking on party here, because I'm talking about its sales, and sales has to do with customers. So automatically the party is a customer. So what I'm going to do now is I'm going to scroll here now. If, for instance, the customer has not already been created in the system, I can come here and create a new customer. So I click here, create a new customer, and it takes me to the whole page to create a particular customer and put the customer in the system. Does that answer your question?
Yes, it does. Thank you.
You're welcome. Okay, so if we don't have any other questions, I'm going to move to what slide? Okay, so looking about accounting statement. So we can actually, after you've done all your accounting transactions, you want to be able to get a snapshot of, where you really are. Let's go to accounts. Okay, let's come over here. Okay. So all the receivables will be found here. Accounts receivable. That's account statements. Something for the account statements. Okay, so shows account statements, accounts receivable. So this should be an account. Storage reports. Okay, so I think the summary actually also shows as a statement. So basically, the summary shows all the activities within a particular, Biococo Dangote. So whatever activity that we've done. So you see Biococo, advanced amount 0, 0, 0, credit, outstanding 16,200, Dangote 60,000 0 to 30. That's tell you how long it's been this invoice has been open. Yeah. So they give you this one to tell you how old this particular invoice is. So this is basically for those of us that would end up working within either work for organizations fully or we end up working for Teekay Henry. This is some kind of report that we'll always, have to look at from, on a day-to-day basis. But I'm very sure there should be let's look at a dashboard to give us a clear shot of how new deals. Mm, that's the dashboard. Mhm. Mm, mm. Okay, yeah. So growth by customer. Same. Yeah. So people like Tola that is working in Project New York, right? You're gonna have to start working with this. You have vendors that are supposed to pay. You should, when you are generating your reports, you should be able to come to places like this and generate reports. I know Beatrice is gonna be working on the reporting, the general reporting. So eventually, by the time we start consolidating all the reports for all the different locations, the whole Excel format that we're currently using is something that will be on the back burner. We should be able to generate, these reports. Just is key. Money is the lifeblood of any business. If you do not manage your cash flow properly, meaning that you don't manage what is coming in and what's going out, you're gonna actually have um serious issues. So this is for sales, accounts receivable. This is for okay. These are the reports. Sales payments, summary, credit, customer credit balance, commissions. See, this yeah, pricing. Done with any, done with any payments. Now, some of you have never taken time to look at this part of OS. I'm glad you are seeing it today. Okay, sales register. How many of you in here, how many of us here have worked with sales registers on OS with Product London? How many of us here have worked with sales register with Project
I have,
London?
I have, sir.
Sorry, who's speaking? Who's speaking? Is that Solomon?
Yes, sir.
Okay, so what's been your experience? What's it like working with the sales register?
The sales register shows you the sales of each of the cashiers. Like when you go to the top button by your left, after the gate where there's owner, when you insert the particular cashier's name there, it gives you the um, sales of that cashier, and then you come and then you come to where you have company, put in where the cashier is working from. For instance, Cooper Hot Chevron, and then the owner there.
Sorry, Solomon, we're not using names. You need to understand that. We use pseudonyms. You can't use the name of the client when we're having a training program. That's why I keep on saying Project London, Project Chicago, and the rest of them.
Okay. So for the company, I'm putting Project London, the particular outlet for Project London. And then at the owner column there, you put in the cashier's name, fill in the date, and then the fresh. It gives you the whole sales for that particular cashier.
Okay, that's wonderful. So basically, and in everything you can do, all this this particular product can actually be, you know, sent to, say for instance, those in customer service, somebody's complaining about, oh, they don't have access to a particular, some particular information. We can actually export this data from PDF and send to them. Simple. There's so many simple things we can do to manage the expectations of our clients. You know, the guys that say they want a particular information, you go to the sales register, export it, send it to them by email. Or, and I just saw something here now that even says set up auto email. You know, basically what it probably means is that you might actually, let's even see what auto email reports. So basically there are reports here that can will be actually be sent, to the different managers at a particular time. Now this particular report now is saying sales register. You know, TT Lion, are you there?
Yes, sir.
So this is something that I will need you to actually want to do for Project London, setting up auto email on their system. So look for the different reports that. So we have to create reports, and those reports will be sent to them, the particular numbers, to put them into whoever it is that is responsible, maybe Nathaniel or whoever it is, you know. So we don't even keep on asking us questions. It just goes directly to them. You get what I'm saying?
Okay. Yes, sir. I understand, sir.
So put that in your notes. Yeah.
Oh, okay, sir.
Okay. So payment terms. This is also a very, very important part of it. You are working with a client, and you don't want the client to. So most of the time, clients are not willing to pay the full amount. You charge the client 5 million naira for a 6 month project. They're not going to pay you 5 million naira upfront. They definitely would want to spread that payment over a period of time. So you can actually create a template for payment terms. And give you let me show you how that works. So we have about 10 minutes to wrap up this. Then once it goes up, we're going to log in again and do another 10 minutes to do a recap, and then that will be it. So, payment term. So I say payment term name. So the payment term name, I think I'll do, let's see, payment term template. Payment term template. Okay. All right. So now this is a template that we use for payment terms. Sorry, one second. Back. So we want to create a template and make sure that those templates apply to certain kinds of customers. If we're working on a 6 month project, we want to have a template that says, okay, the first payment will be, we're going to, first amount, we charge you 70% of the invoice, and the remaining 30% will be spread over 3 months. So that's 70% for the first 3 months, the remaining 30% will be spread over 3 months. We create a template for that. So the template name will be say 6 months by annual. Let's say that's a 6 month project. So this is a payment template. Allocate payment based on payment items. Payment term. So we will now create payment term. Payment term name, say um, initial payment. Invoice portion 70%. Invoice due dates based on invoice date. So we're saying 5 days. Say, so we can put the story here. The next one, we come and say payment term, monthly payment, 10%. So the first one is we're going to say, so we're saying that in 3 months we start collecting the balance. So 3 months that's 90 days. So we say 90 days from the invoice date. So we say monthly payments 1. Payments 2. Invoice portion 10%. So the other one was 90 days. This is going to be 120 days. Ten percent. So this one's going to be 150. So this is a template 6-month project. So whenever we apply this particular payment time, we apply it to a particular invoice, it's going to give us, we're going to let them understand. So we can actually now, we can name all these things, the payment phase 1, or setup phase, whatever it is you want to call it. But this is a template. So going forward, you apply this template. So for different types of client that we have, as we deal with different issues, we figure out the kind of payment templates we want to apply. Now, this is going to be good for those in Project New York, Project Chicago, that is coming up, and it also is going to be good for even those that are working in-house with Teekay and Henry. All right, so I think in a nutshell, this is basically what I've been able to put together today. I need us to ask questions. I think we just have about 4 minutes left, so we just, I need you guys to go back to work. Ask questions and let's just take it from there. All right, so I'm waiting.